welcome. It's your boy, Trust My Level. So we had a question in the group about implied volatility. So I wanted to just take a moment and break down implied volatility real quick. You know, it's a number that we don't really see or not a lot of people care about until we get to earnings, but it is a daily piece that everybody should look at because it adds and subtracts from your contract. So looking at implied volatility. So implied volatility, let's just take this from Apple. I'm going to come down here and I'm looking at the actual stock statistics. So implied volatility for Apple is 33.66%. So what that's telling me is that over a 52-week period, you expect, 33.66. So you expect the stock to move plus or minus 33.66% based on, you know, the current movement over the last 52 weeks. They're expecting it to gain or lose 33.66%. That's the basic definition of that. And then once I come up to the, you see the IV here, so the current IV percentile, and then the HV, which is the historical IV percentile. So what this current IV percentile is telling you, this is what we look at to decide if this is something that I want to buy contracts for, or is it something I want to sell contracts on? So if this number is above, let's say 50, you know, sometimes I look between 30 and 50. And then once it starts getting in that 30 and 50 range, now I'm looking to sell contracts. I'm looking to be the seller of contracts. So I will be the person that you're buying the contract from. If we're in that 30 to 50 range, which we're in right now, but 32 is not that bad at the moment. So no, a lot of people, you know, they put it at 50 to be the seller. They put this at 50%, and anything above 50%, they want to go sell those contracts and make income from that instead of being the one holding that contract. Because if that implied volatility drops, oh my gosh, you are losing a lot of money, and we put more money into the seller's pockets. So current IV percentile is letting you know that 68% of the time in the last 52 weeks, we have traded below this 33.66% implied volatility. I'm gonna say that one more time. 68% of the time, based on this current IV percentile, we have traded 68% of the time below the current 33.6 IV percentage. So now this is going to look a little bit different for FUBO because some of those were absolutely ridiculous. Okay, so we're going to get to that in a second. All right, so let's talk about this HV. So the HV is the historical volatility, and that's telling you that over the last, whatever the life of the stock is, that implied volatility percentile is 48%. So that's telling you that 52% of the time we've traded below this 33.66 volatility. So, you know, a little bit closer to the historical. Right now, like I said, 68%, we've traded below 68% of the time of this implied volatility. So, yeah. Let's go up to FUBO and see what the difference is for FUBO. Oh, and then when we come over here to the contracts, it's a little bit different for the contracts. I can just look over here and see that the implied volatility on the September 16th contracts is 41.92%. So they're expecting between a plus and minus $3.61 plus or minus for those particular contracts. And then the further you go out, you know, the bigger the number that they expect the contract to either plus or minus $32.38 for, let's say, the February contracts, you know, $30 for the February contracts. So that's another way to gauge, hey, what is it expected for your contract to move? $3.61. Is that something I want to get into? If I get into this and now I got a 33. So like now, these IVs are very close to the historical IV and the actual IV that we're looking at for the actual stock down here. So, you know, it's at 32% here. And I'm sorry, the IV is here 33.66. So those are closer to the actual potential for the stock. Now, of course, you know, with options, yes, it can move. And this is just trying to give you that mathematical base so that you can potentially see what movement you can have on these options. Okay. So normally with IV on the options, so we have Vega. And Vega is a Greek that, again, is ignored until, you know, somebody figures out with earnings that the contract dropped, then Vega becomes front and center. But Vega is in play all day, every day. Okay, so Vega, I'm just explaining Vega real quick. So Vega, like this Vega is at 4 cents. So for every 1% increase in implied volatility on the contract, this 4 cent will be added to the contract price. Say that one more time. For every 1% increase, so if this went to 34.36, they would add 4 cents to the contract price. So now if we go over to SPX real quick, and this is where a lot of people are making money on SPX. I'm just talking about, I'm not going to talk about SPX chain. I'm just talking about the Vega, so you can see exactly what I'm talking about here. So right here, so you got 32 right now, the implied volatility is at 30%. So if this goes to 31%, that $1 would be added to the contract price. So instead of it being 29.30, it would be 30.30, just from the implied volatility moving up. And just like now, it's going to drop a little bit. You see how these are going down? It's going down. The contract price is going down too. Okay, and of course the index is moving at the same time. So these are still trading at night. Yeah, these are still trading. So we're watching the live trading for SPX. So again, as this drops, it's going to take that amount from the contract. As it goes up, it's going to add that amount to the contracts. Then when you come over to FUBO, let's look at FUBO. Everything looks totally different because now Vega is not adding anything to the contracts, and it's not adding anything to these contracts until you get into, I think it's, let's see, the only one here at September 7th. They're not adding anything into the contracts here until October 14th. Now they're adding 1 cent, but the normal things that you would see is definitely not that. So let's talk about, here's implied volatility for FUBO. So as I said before, implied volatility is telling you that they expect the price of the stock to potentially gain 143%, up to 143%. So not guaranteed, but up to 143%. Now, if you look at FUBO, but we can't tell when it's going to happen. So now if you come over here and look at FUBO, we look at the IV rank for FUBO, and that's telling you that 33% of the time we've been above the current implied volatility. So if it's 33% of the time we've been above, it's not that bad. 67% of the time we've been below, or 66.5% of the time we've been below. And right now the implied volatility is at 143.86. So again, I expect, or the calculation is expecting the potential 143% gain or loss in the stock over a 52-week period. So, and of course they have it out here to 1 standard deviation to gain in a day 46 cents, to gain in a week $1.02, and to gain in a month $2.13. So, and this is just based on that calculations off of these implied volatilities. So, yeah, I don't know if you have any other questions, but if you do, send me a message, and then we can, I can add some more to this, take away. If you don't understand something, please let me know. I think that's about it. Oh, IV. Yeah, we talked about IV. We talked about HV. We talked about the implied volatility. We talked about the implied volatility in the contracts. Even with this 200%, you got 58 cents is a potential that they're expecting these contracts to move. Now, I'm not saying that's going to happen for these out of the money contracts, but if it starts moving, you potentially could. So you just have to watch it and see what happens. And right now, like I said, you got some nice little movements over here. Let me take you back over to the chart real quick. I'm just looking at the chart. So right now on the daily chart, I'm seeing this got a little TTO that happened right here. So you got a 2 down and an immediate at above 476. Boom, it popped up to 512. So, and it looks like it's doing like this movement that was right here. Looks like it's repeating that movement here, coming down, coming back up potentially. So 143% potential move. Let's see it. That's not, let's see. This move right here was 251%. So it's not unheard of for FUBO. You just have to wait and see what happens. Is it going to happen all in 1 day, 2 days, 3 days? We don't know. It could move up 50% by tomorrow. You never know. So just Yeah, be safe. Don't put your entire portfolio into it. And then let's see what happens. All right, you got any questions, let me know, and we'll go from there.